The S&P 500 gained 0.38% on Wednesday, same number as Tuesday. But what happened underneath that 0.38% was completely different. And if you're not paying attention to the rotation happening right now, you're going to be holding the wrong stocks on Thursday. If you're new here, hit subscribe. The free weekly market note is linked in the description, no paywall. The macro setup looked textbook. PPI came in at 5.5% year-over-year, core PPI at 4.7%, and the core monthly number at just 0.2%, all below expectations. CPI Tuesday, PPI Wednesday, two consecutive inflation prints confirming the disinflation narrative. Energy costs fell 6.4%, transportation eased, and food prices dropped for the first time in 3 months. The market's reaction? Futures ticked up, then basically flatlined. Fed Chair Warsh testified before the Senate at 10 a.m., and he gave the market exactly what it didn't want: clarity. He said the Fed cannot declare victory on inflation, that they need to watch subsequent price data, and that Hormuz-driven energy risks remain a wild card. Not hawkish, not dovish. A 10 a.m. testimony that moved nothing. The market had already priced in the dovish scenario from Tuesday's CPI, and Warsh refused to give it the confirmation it was looking for. So stocks just drifted. Now here's where it gets interesting. The S&P 500 closed at 7,572, and the Nasdaq added 0.62% to 26,269. But the sector rotation was violent. Storage chips got destroyed. SK Hynix fell 9%. Micron dropped 8%. AMD lost 3.5%. Intel fell 4.4%. The Philadelphia Semiconductor Index cratered 4.4% on the day. This was a concentrated sell-off in the exact names that led Tuesday's rally. The money didn't leave the market, it rotated. Apple gained 4%, the best performer among the Magnificent Seven. Google added 3.6% on cloud and AI search. Meta gained 3%. Amazon 3%. Microsoft nearly 3%. The entire platform tech complex, companies with real earnings, real cash flow, real AI monetization, absorbed the capital-fleeing speculative chips. And the single biggest gainer in tech? PayPal, up 17%. Not a Magnificent Seven name, not an AI chip, a fintech payments company that just caught a massive bid. The chart I want to show you today is Coinbase, Coin. Coinbase has been in a brutal downtrend since June, dropping from the 390s to a low of $139 in early July. Wednesday, Coin gained 5.5%, closing at $167.21. The short-term Bollinger trend sits at $161.30. Coin closed above it for the first time in weeks. The lower channel is at $171.99, and it's been compressing down toward price. What that tells me is Coin is entering a compression zone between the short-term trend and the lower channel. If it can clear $172, there's room to run toward the midterm trend near $183. But this is a stock that lost 65% from its highs. The trend is still down until proven otherwise. Use the $161 level as your stop. If you're looking for a high beta crypto proxy that's showing signs of basing, Coin is worth watching. Not buying yet, but watching. Thursday brings TSMC earnings. After Wednesday's semiconductor bloodbath, TSMC's guidance is going to set the tone for the entire chip sector. If TSMC sounds optimistic about AI demand, the storage sell-off gets a floor. If TSMC hedges or points to inventory corrections, this rotation out of semiconductors accelerates. Iran continues to escalate Hormuz rhetoric. The IRGC has redeployed to the Strait. WTI is sitting at $80, and the administration has shown no sign of de-escalating. Any military spark sends oil spiking and stocks tumbling. Here's my read. The market has now had 2 days of perfect inflation data and responded with identical 0.38% gains. That's not accumulation, that's distribution at the top. The rotation from speculative semis into platform tech is real and likely continues. For NVDA specifically, Wednesday was a warning. Only 0.33%, while the Nasdaq added 0.62%. Money is leaving the trade that worked for months. Don't fight the rotation. If you're long NVDA from lower, consider trimming into any bounce. If you're looking for fresh exposure, platform tech, the Apples, Amazons, and Metas of the world is where the flow is going. For coin, $161 is the line. Below that, the downtrend resumes. Above 172s, you get a squeeze toward 183s. Let it prove itself before committing capital. Trade the setup in front of you, don't predict. Wait for the tape to tell you what it's doing. Protect what you have. Trade safe.